First 3 quarters, free cash flow neutral. And then Q4, that's when the minimum payments for PPX kick in. In Q1 of 2026, we may be, knock on wood, if it's approved, etc., be paying our first inaugural dividend.
Talking silver here with Silver Crown Royalties. And Peter, congrats on securing your third producing royalty deal.
Thank you very much, Arne. Super happy to be here.
PPX Mining being the partner, and of course now the big question is how is that going to impact 2025 outlook for the share price, but also for your plans? What's in store for us shareholders in 2025?
Well, Arne, if I knew how it would impact the share price, you know what? I'd be retired somewhere on a beautiful island. Obviously, I think it's going to be positive, but who's to say, right? You need a silver price component there, and you obviously need to be able to keep the story growing, keep the story going. Now, what PPX should add to us is roughly quadruple our revenues without any impact from the silver price. Now, that, of course, depends on how successful they are in terms of building a new plant that they're putting on site, but that's where this is essentially last money in. So there's another financial partner that they have supported, they've had for a while. They're putting up the bulk of the capital. We are literally last money in, a little bit of working capital they get from us, and they'll go from, steady state kind of 2,000-3,000 ounces a quarter production attributable maybe to us to 56,000 ounces a year, 15,000 ounces ish that would then start getting paid to us in Q4 next year. What that does for us is, and I think that this kind of translates nicely, it gets us into free cash flow positive territory. So where we are right now, what our break even is about 22,000 ounces silver a year at $30 silver. That gets us to free cash flow neutral. Anything on top of this, i.e. PPX's plant coming in full production in Q4 next year, that gets us to 78-ish thousand ounces a year. So 3.5-4 times our revenues. That each one of those additional dollars goes straight to the bottom line. We don't anticipate any additional cost. On top of this, cash gets deployed, money goes to the bottom line.
And now the big question then, is that going to be deployed to shareholders or reinvested in other royalty projects?
Well, theoretically, Arne, it should be reflected in the share price. If you're accruing free cash flow to the balance sheet, then obviously on a dollar per share accrued to the balance sheet basis, you should get some kind of revaluation. However, we believe, and we could be wrong here, but we believe that investors put money into precious metals companies because they either want exposure to precious metals or they want to make money and get it back. One of the two. But bottom line is they put cash money in so they don't have to hold cash money so they can get precious metals exposure. So what we're going to do is we're going to dividend out. Now, full disclosure here, we haven't passed any kind of a dividend policy because we don't have free cash flow. But this is my intention fully, and I will try to push this by the board once we do have free cash flow to pay that out in dividends. The reasoning for it is quite simple. Could we put it back in the ground? Of course we could. But if we have a 10% free cash flow yield, 20% free cash flow yield, it would take us 10 years, 5 years in order to have enough capital that we accumulated on our balance sheet, again, just holding cash. I mean, arguably we could buy silver with it and then sell it and then deploy it. But it would take us 5 to 10 years to do another deal of similar size. I think that's unacceptable. What we will continue to do is we will grow by identifying various opportunities and then using our equity capital to grow the company. Either we raise the money in the market for a cash portion of the financing, or we simply do an equity for silver swap, very much like what we did with Backtech. So Backtech Environmental is 100% an equity transaction. We get future silver from them for equity payment today and then in stages over time for future free cash flow. So these are the types of deals that we're going to do, and that's what we aim to do with free cash flow, is return it to the equity investors.
So that's what's basically the outlook for 2025, free cash flow neutral, and then paying dividends as you go along. So you're actually a silver pure play royalty dividend company going forward.
And that's exactly what the thesis, what the vision for this company has always been. We want it to be a yield product that has exposure to precious metals. We chose silver because it was more readily available. No one else was really focused on that space. So we were able to source deals, not easily, nothing is ever easy, but I think with relatively better chances of success than if we were to go into the gold space, which is quite busy and a lot of capital going in there and a lot of competition, as it were. So silver, exposure to precious metals, and have a yield product, pay a dividend. That's always been the vision for the company. And again, if everything goes well, we should be in a position to do exactly that in Q4 of 2025. So yes, just like you said, first 3 quarters, free cash flow neutral. And then Q4, that's when the minimum payments for PPX kick in. In Q1 of 2026, we may be, knock on wood, if it's approved, etc., be paying our first inaugural dividend. Back to the numbers, if we look at how much silver we expect to get in Q4 based on, again, the minimum deliveries, should be about 20,000 ounces per quarter. If you subtract from that our internal burn rate, which is about 250 per quarter Canadian, you end up with somewhere in the neighborhood of maybe 70 cents annualized at $30 silver in free cash flow. If you pay the whole thing out in dividends, and again, I'm saying this is something that could happen, hasn't happened yet, but it could, you end up with a 10% dividend yield.
Yeah, future forward-looking statement. And of course, there is a certain dependency on the silver price. Currently, silver trading at $29.48 and change. We had a peak in October. Silver's come under pressure recently together with gold also retracting. So what is your outlook for 2025 and how relevant is that in terms of exposure for the royalty dividend play going forward?
That's a great question, Arne. We kind of take a very long-term view on the price of silver. So we look back all the way to the early 1900s, and the silver price has appreciated roughly 4.5% per year over that time frame. Cumulative average growth rate, cumulative annual growth rate over that time frame. So 4 or 5% increase in the metal price next year. That seems entirely reasonable to us, simply based on historic trends. Now, more recently, if we were to shrink that time frame from the 110, 120 years to just the last 30 years, rate goes up closer to 10% a year. So could it be 5 to 10%? Yeah, and we've had that view for the last little while. Now, can you actually draw a straight line that says, okay, it wouldn't be, it would be a kind of parabolic curve, but you could draw that as your 4.5% or 10% per year annual increase and overlay the actual silver price on top of it. Are we ahead of ourselves? It depends on how far back you go, what you rebase it to. Now, silver itself is up almost 30% this year. We're looking at 25%-ish, 24% as of Friday's close. That's obviously a lot more than 10%. So could we see steadying here, a little bit of a base building? Absolutely. Could we see revisit lower, maybe to $26? That's also entirely plausible. And on these pullbacks, when we do challenge the 200-day moving average, we do sometimes a little bit of a dip below that. Everything reaccelerates. In terms of supply demand, there's no reason to think that that trend breaks. Supply has been very weak, especially coming out of Peru and the big silver producing countries. That's mostly because lead and zinc prices are not good. So nobody's really building any new primary silver mines, lead and zinc in them. And we've seen copper mines and other such big projects not necessarily stall out, but certainly not come online. So as you deplete material that has silver in it and you're not putting any more material on the market, well, that constrains your supply. In terms of the demand growth, well, Arne, you have a channel named after this. We all know what supply looks like, and we can talk about photovoltaics and about electronics, but you've gone from probably somewhere in the neighborhood of 35%, maybe okay, let's call it 10 years ago, be conservative, to almost 50% silver demand in electronics. And if anything, there's just more electronics being manufactured all the time than there were 10 years ago in terms of volumes and in terms of mass demand. So I don't think that changes next year. Sure, could there be a recession? Could there be any of these other extraneous factors? Absolutely. But there is enough of a deficit, I think, to support the metal price. And back to the silver price prediction, I hate making these, but I just look at, history and trends, 4.5%, 5% to 10% any given time, year over year. That's not illogical. And I don't think it's indefensible. So that's what I'm going to go with.
Yeah, Peter, thanks for sharing those macro views here. And congrats again on your third producing royalty, closing the deal with PPX Mining. And I'm looking forward to 2025. Good outlook here for us shareholders. And wish you a happy festive season with your family.
Thank you very much, Arne. A very Merry Christmas to you and yours, and all the best into next year. Thank you.